Welcome traders, Patrick at Trader, trading123.net. In this video we're going to talk about the squeeze indicator and how to use it in your trading. Basically the squeeze indicator is a volatility indicator, and basically it reads the momentum. When on the right hand side you got these levels above zero, the momentum and the trend is up. Below zero it's down, as you see the red and yellow. So on the zero line, this is the what they call the squeeze. So when you have all these red dots and the momentum is down below, the longer the red dots are, the bigger the move you're going to have to the upside. So like here, when the dot fires blue, that's a change in momentum and the price is going to go up, in which it did. And then here, this is positive momentum, this is negative momentum. So even though it's rising up, it's losing its momentum as the bars start to go below the zero line. And again, right here, when they start to go to zero line and below and turn red, the momentum is lost, so it often ends up being a good short on the blue dot, and then the price sells off, and then you would stay short until the momentum changes here at the zero line. And then you have the big red volatility dots here, the squeeze dots, showing that a potential big up move is coming, and that's what we get right here. So if you would have caught this move here, probably on 2 or 3 contracts for 100, 200 bucks, this move down would be 300 bucks on 2 to 3 contracts, and then this big move up right there, you would have made over $500, and you would stay long as the momentum was above the zero line here. So that's how the indicator works. And then the market is breaking out here and it's going higher, so this move isn't really too weak, and it's going to snap back and go higher, which it does. So there's another powerful move. And up we go. Now with any indicator, it's going to take a week or two to learn and use it in the market each day, so we suggest trading in sim and trade with the overall trend. Now you can add let's add a 200-day moving average to the chart. So here we've added the 200-day EMA moving average to the chart, and as you see here, we got this up move here, and then the price fell below the 200-day moving average. So this up move was really not that big, even though it did have a squeeze, and the momentum was moving up off the low, but it didn't last long, and the price fell through the 200-day and went down, and then we bounced again. I mean, this is okay if you're scalping, and then we hit the 200-day moving average again, so overall the trend is down. So this would have been a nice short right into this 200-day as the momentum was being lost, and the blue dots appear on the squeeze line, zero line, and down the price action goes. And you'd monitor this in the price action as it's going below the zero line. Then it pops to the upside, and now the price is above the 200-day moving average. So pretty much this is a rip off the low, then a pullback, and up we go. So this really wouldn't have been a good short here, even though you could have made some money scalping it. But you're not going to trade every color change. You need to add like the 200-day moving average as a filter to filter out some of these trades. I mean, this is a strong move where you could have easily made $200 on 2 contracts. So it's going to be up to you to make the decisions on when to get in. And then, as I said, the trend is going up. We're above the 200-day moving average, and this price isn't really selling off. And then we take off to the upside. And it just stays above the 200-day moving average. So you wouldn't take these shorts because they would got you nothing. But one thing you have to remember is as long as these red dots are on the zero line, it means the squeeze is coming up and we get a push to the upside on these blue dots. So potentially you could go long here if you wish and have a tight stop and then ride it to the highs. So it's going to take some practice with the indicator to get used to it and recognize the setups. Now here's a nice move. We come up back up over the 200-day and we hold above the 200-day, and then it makes a wedge here, as you see. Go like that, and then there's your wedge, and then you got a little squeeze going on here, and it's getting close to 10 o'clock, and up we go, and that's a big breakout, and it just keeps going higher and higher. So that's a very strong move. You caught this move right here. I mean, it's above the 200-day, and you can even add another moving average if you want. That would have been an explosive move of the day right into the 10 o'clock time frame. So basically, you got to watch the, where the price is compared to the 200-day, and then the squeeze, the red dots, and whether or not the price is above the zero line or below the zero line. So again, to recap on this indicator, you got your squeeze on the zero line with the red dots and the momentum positive above the zero line, negative below the zero line. And so here we have a move. I would have entered right here at the 200-day, and the price goes up, strong move. And as long as these candles are printing green, you'd stay long. Don't worry about the color of these bars until the momentum gets below the zero line. And then this would have been a nice short here, and it sells off, and the first time it sells off, it's going to go and test the 200-day moving average. So that would be your target if you were short. And as you see, the momentum's below the zero line. It's selling off on these red momentum bars, and then the yellow, and then it gets close to the zero line and we get a little pop. So that's the way you use the squeeze indicator. Like I said, be sure to trade in Sim for a week or two till you fully understand the indicator and how to put it to use in your trading. So if you have any questions, just email us at trading123net@yahoo.com. This is Patrick, Head Trader. Good luck with your trading.